Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Thank you for joining us. I'm your host, Lance Pederson. This is the Real Estate Risk Report. So today I have with me Blake Dailey. He is a multifamily syndicator and investor. How you doing today, Blake?
I'm good, Lance. Thanks for having me here.
Yeah, my pleasure, man. Yeah, so why don't you just share a little bit about how you kind of got into real estate and what's kind of driven you to multifamily and what's the allure and what looks like, that's sort of become your passion. So maybe give us a little bit of your origin story and
Absolutely. I love it. I got started really early. So I got started with Bigger Pockets while I was still in college at the Air Force Academy, reading the books, listening to the podcast. And I just had made up my mind that when I graduated, when I got out, when I got to my first duty station, because I'm active duty Air Force still, when I got to my first duty station, I was going to house hack with a small multifamily property, which we did, house hack that, lived for free, used my housing allowance, pocketed all that, rolled that into more investments. I'm in Panama City here and found partners here, got into doing rehabs on hurricane damaged homes. And I did a couple of deals with those people, did another small multifamily BRRRR. And on that one, got a commercial loan, did the rehab, raised private money, kind of did everything I knew I needed to do to get into bigger multifamily. And that was kind of always the goal, kind of far off in my mind. And I think I kind of got in my own way thinking it was too big or not for me yet. But I went through this deal and was like, I kind of did everything. So I made the jump to get into bigger commercial multifamily. And then got in with a group of guys that were focusing on these bigger deals. And I started raising money. I did Bill Allen's 30 days to 500K challenge. I don't know if you know Bill, but he did this. He's another military investor guy and one of my masterminds. So just started using everything I learned and applied to reaching out to more investors, bringing in capital. That way, when I found these big deals, I could get them done. And now finally, after 2020 was a big transition year and gunning for that first multifamily deal. And now I got a 66 under contract set to close here about this time next month. And also an 8 unit here in Panama City as well. So those are pending. So I got to knock on wood, but that's kind of where I'm at right now.
Cool. So how do you balance sort of the, what you just said sounds like a lot, but then also being kind of active duty military. I mean, and it's funny because I've had a few guests lately that have been, military guys and, how do you balance that? I mean, that seems like...
Yeah, that's a really good question. One I'm trying to figure out too. So I've just been trying to get more systematized and more process focused. So I'm in the process of hiring a few of my first positions out, like podcast. I have a podcast as well, the Multifamily Journey podcast, and I have all that editing and posting and everything hired out with a service also from another guy in my mastermind. So that's been huge for me is being around people that are at higher levels to get in with them. But also like hiring out like bookkeeping and expense tracking, stuff like that. And then an admin to kind of help me with the scheduling and all the little stuff I have to do. So really just trying to prioritize like where my time is best spent. Obviously my Air Force job is big for me. Obviously like finding deals and connecting with investors, like genuinely and, finding the right kind of people to mesh up with. And then my wife too, and family. So those are kind of the three things I put my most time towards and kind of systematize and process those other things as best I can, which I need to work on a little bit, but that's kind of how.
Yeah. So how do you source opportunities? Is it all in Florida or like it's stuff that's near you or, how are you getting your deal flow?
Yeah. So it's been a myriad of different ways. So I started out with just local agents. So I'll just basically go through MLS. And like since then, I think it's got more competitive here. The prices have gotten out. So you can't really find good areas or good deals on the MLS in a lot of places, and mine's one of those. So then I started doing off-market deals, started doing direct to seller, sending direct mail notes, doing cold calling, even tried ringless voicemail for a little bit, texting, kind of everything there, and just working lists, like getting the data from list source, analyzing that, getting it skip traced, and then hitting those leads and just being consistent there. I was successful with some deals here in Panama City doing just that. And then on the bigger multifamily stuff, I think 95% of multifamily deals, commercial multifamily deals, trade with brokers. So it's kind of a whole different game. So then it's really just picking up the phone again and making the calls, talking to brokers, showing your track record and experience, which is kind of tough when you're newer to the game.
Yeah.
But that's where you can overcome that by leveraging a good team, like I was able to do with GrowthView and what I'm doing with my current partnership on the 66 unit. They had a foothold in the market. They found a good deal, and they, through mutual connection, we knew each other and fit what each other needed. They needed capital. I needed a good deal. So it worked out.
Yeah, very good. So it sounds like the part, it sounds like you got an interesting way to sort of source some stuff, sending out and, kind of get in front of potential sellers. But it sounds like the capital raising piece has been something you've taken to as well, in terms of just the ability to kind of build and grow relationships with passive investors, or?
Yeah. That's a part where I would call like one of my skill sets. I'm not great at it. There's way better capital raisers than me, so I don't want to toot my own horn there. But I think just as far as, creating genuine relationships with people, like finding the commonalities and acting, in somebody's best interest. And then I think when you make the shift that, you're the one like out doing all the work, sourcing these good opportunities, and it's just that it's an opportunity, and that you're not so much asking for money, but like genuinely interested in, other people's development. So like when you're having conversations, for example, when you meet somebody for the first time, like, oh, what do you do? Oh, I'm a multifamily investor and Air Force contracting officer, and help private investors get into these really nice multifamily deals that they couldn't get in otherwise. And then that breaks the ice. Oh, tell me more about that. And then you find out what they're investing in and have that whole conversation. And then being in the Air Force, that's another discourse community for me as well, to be able to easily like break that ice and get into the conversation. So other Air Force people have been a good source of raise as well, because you kind of have that, common background, kind of shared respect. Dentists might be the same way, or doctors, whatever that kind of shared path is in finding that. So.
Yeah, that makes sense. So what is your sort of long-term plan in terms of the Air Force? Do you have sort of you going to go the full 20, or you got it sort of?
I don't know. If my commander is listening, then yes, but, but I really don't know. Excuse me. I think that's a question. I like to keep all doors open. I would absolutely stay. I love serving, love, wearing the stripes and the Air Force over my chest. But I think it depends. I'd like to keep my doors open. If I love what I'm doing at the time, like I do now, then I could see myself staying in. But if the real estate takes off, I could see pursuing that full time as well, which I kind of like spend full time in real estate investing now. I don't sleep that much, so I spend about equal hours. Yeah.
Well, you're young, that's I remember when I was, younger, man, you can go like 16 hours a day, and you might as well, man. You only live once. You got to keep it. You
wake up at 4:15, get the day started, and that's the way to do it.
That's great. So in terms of like for you, when you're looking at a deal, what are the big things that are sort of, will make or break whether or not you're going to pursue it, further? What's sort of your assessment process, or that checklist that you're kind of running through when you're vetting an opportunity?
Yeah, I think that's a dynamic question, and it's changed over time. So when I was looking at residential properties, where most people start, is like I wanted to be able to find good BRRRR properties. So buy, rehab, rent, refinance, repeat. So I wanted to be able to put my capital or raise private capital, put it into a good deal, add value, rent it out, and then refinance to get that initial capital back, to pay myself back or pay my investor back, and then repeat the process with that same pool of capital, whether it's your own or more investors, and you snowball it and so forth. So that same capital allows for the velocity of money to keep working. And then in multifamily, it's really the same thing. The same principles apply, but it's just at a bigger scale. And what I found in multifamily is too, that the margins are a little bit less. So it's not likely, like all of my properties, I don't have any initial capital in them because I've been able to complete the successful BRRRR. But on multifamily, it's a little bit different, right? To find a really good multifamily deal, because it's a kind of a more saturated market. So you really have to build the relationships, and there's a lot of work that goes into finding good deals, which is when you find one, I found it's depending on the person it's easy to raise the capital for, because people want that good deal. But then looking at cash flow, like for me starting out early on, like I wanted cash flow, right? Because I wanted to be able to replace my W-2 income by the time that, if I decided to, I'd be ready to get out of the Air Force. Yeah. But we did that in like year 1 as opposed to year 5. So now my investment criteria has shifted a lot, because cash flow like can get you, it differs, but cash flow can like get you out of your job if that's what you want to do, get you that passive income to, handle your expenses and be able to follow what you're really passionate about, if you're not passionate about your job. But equity is really what grows your wealth and gets you to the next level. So I think in like residential, cash flow gives you the defense in like downturns and everything. And then in multifamily, the cash flows where you get like, that's where you get your returns, because it's a cash flowing property. It's meant for cash flow. And in both, equity gives you the options and lowers your overall risk because you have exit strategies. So now I'm looking at, especially with kind of where we're on the market, multiple exit strategies. Like, can I refinance this if I need to? I'm looking for long-term fixed rate debt as much as possible. And I'm looking to be able to, either complete a BRRRR, on a big residential property. It's the same thing, or a big multifamily property, because it's the same process, is that same value add process. Yep. And it's like what I do in my Air Force job, because I'm hiring contractors, adding value, building back a $5 billion base rebuild. So it's really the same thing all across the board. And then, ultimately, like for me, I really like cash flow and I like equity. So I'm using those metrics as my returns. And the kind of investors that I'm bringing on, kind of my avatar, if you will, is that same way. Like they want some cash flow. Yes, like passive income is what really draws people in. Mm-hmm. When you can really give people equity, like that IRR metric, really that kind of that overall return metric, then I think that's what really fires people up, because they realize that's what's going to create wealth.
Yeah, the growth. Yeah, exactly. Yeah, build the wealth. So for you on, post acquisition, I'm assuming you're using like third-party property managers, and yep. I mean, like how deep value add are you going? Like how much are you putting in to each unit, or is it mainly like operational sort of reduced expenses, or what are the kind of?
Yeah, so I've really done the whole game, but like the first rehab property I did was a like complete loss from Hurricane Michael down here. So it was to the studs full on. So I got kind of thrown into it early, and learn trial by fire. And the same thing with like rebuilding the base. I mean, we're handling, I had $30 million of contracts at one time to rebuild facilities, demo, just everything you think of like building an Air Force base. And then in the multifamily side, I right now have more of a tolerance toward kind of light to like medium value add. So wouldn't necessarily want anything that was like, hit by a tornado or like hit by a hurricane here, because I think that you have to have a big risk tolerance, especially when you're bringing in investor capital, right? You don't want to put them in a risky situation. And yes, I've done those kind of rehabs, but what I've learned from those is where you can limit your risk a lot and reduce the risk of your budget just inflating on you if you stick to kind of, more light kind of rehab. So on this 66 unit, for example, I think we're rehabbing like 49 out of the 66. And the other 66 are already like kind of up to date, up to the market. So those are, for example, it's like cabinets, some exterior window painting, countertops, new flooring and paint. So not too overly extensive, but looking for those returns or those repairs where you get the most return. And obviously I'm not a lipstick on the pig kind of guy. So I like to do things right and get the most kind of bang for your buck within those parameters.
Yeah. So what are the things, having kind of gone on this, journey, this real estate investing journey? And I mean, what's like your biggest, the thing that you would share with someone trying to get into the space, like what's the, looking back now, like what is that, the sort of axiom or, the thing that you can kind of hang your hat on, or, that maybe you learned lessons the hard way or whatever, like you said, the trial by fire stuff, but You know, what is that?
Yeah. Yeah. I think those trial by fire things, like you almost like, there's just stuff you don't know until you don't know, you know? So some things you just have to do, jump in and take action. So that's one of the big takeaways I always like when people are asking me for advice. They're like, you know, do you think the market's here? You know, do you think I should sell instead of BRRRR it and hang on to it for cash flow, whatever? I'm like, just whatever it is, especially it's people that haven't got started. I'm like, just take action, just make it happen. And I think the most important thing for me, on top of just, you know, being somebody that, like, I was a D1 football player, so if something's like in my way, I just want to go right at it. And that's just kind of my personality. That's what inclines me to just go. But it's finding the right people. So I've realized in multifamily, especially, you can't do everything yourself. So there's just like you're saying with your back end kind of business, it's completely different than the acquisition side or the asset management side. So I think to find the right people and surround yourself with the people who can fill in your weaknesses is huge. Like right now, in our current partnership, we have, you know, somebody like me who can do investor relations really well, raise capital, is really familiar with value add. And then you have somebody that's great at underwriting, somebody that's great with like all the SEC compliance kind of stuff. And it really comes down to finding the right people, building your team. And that could be by joining a mastermind, going to local meetups, anything, but like you have to find the right people in this business, because without it, you're just going to, I don't know, be treading water or just be on the hamster wheel, not getting anywhere.
Yeah. So you guys, do you have a podcast? Is that you do that with someone else, or it's just you that?
No, that was just me, just like me and you here. So I interview other multifamily investors and focus on giving that transparent advice behind somebody trying to start and scale into multifamily. So I ask a question at the end every time. It's part of the Fortune 5, but it's like, what's your biggest mistake? And I love that question. Yeah. Because the full question is, what's your biggest mistake that's turned into a learning lesson? And I love that because everybody's different. And it's not like, oh yeah, I got 1,000 units, I'm so great. Like, oh, thanks for being on the podcast. No, it's like, where were your, you know, instances of struggle? Like, where did you not do so good? Like, yeah, you might have a successful portfolio, but you had troubles along the way at some point. And like me on my journey, I think that stuff's more valuable than, you know, always touting the success.
Yeah, I agree. So with that said, what is your answer to that question?
Oh man,
you stepped right into that.
Yeah, I was gonna say that I had a rehab that ended up taking, I think it was like 6.5 weeks over budget, cost me like $10,000 or $15,000 in those 6 weeks, and it just an enormous amount of stress over those 6 weeks. So like the amount of stress was like equal to the monetary losses, and it was because I wasn't thorough enough up front. So I didn't check the permitting process. So I signed like the master permit and the roof permit with my contractor, but we're doing electrical work, didn't sign the electrical permit. And that one came back to bite me because they had to take the drywall back out of the walls, check the wiring, redo it. And it was just a headache and something completely self-imposed because I wasn't, up to date on the current electrical permit. So, yeah.
So what markets do you, are there any markets down in the Southeast there that you love or would like to get into, or, I don't spend much time down there. So I'm always curious about kind of how guys that are in it, how you kind of perceive these various markets. And I know that, Florida in general is sort of getting quite a bit of love, and Miami and, a lot of
California people are coming here because they're just getting hit with taxes and all these COVID restrictions. And I think Florida has proven that sunshine kills the COVID virus because everybody's walking around on the beach, no mask. Like nobody wears them in the gas stations or restaurants, whatever it is, which maybe they should be. But people are just, I don't know, more lighthearted down here. But yeah, I really like Florida, no income tax. That's another reason that brings people here. But yeah, I really like the Panhandle. I think we're probably going to see like Destin and Panama City Beach just blend and grow together. And there's a lot of growth in between both of those, and in both of those specifically, really all the way from Pensacola. So yeah, I really like the Panhandle, these markets. There's a lot of good factors like in multifamily, the three things are job growth, wage growth, population growth, really seeing all of those in this area. And then Panama City specifically, as Kendall rebuilds, bringing influx of billions of dollars into the area, into the infrastructure, and thousands of people coming back to base, military specifically, and then the thousands that will support them and auxiliary businesses and stuff like that in the community. So I think my immediate area will be really good long-term. So excited to continue to grow my local portfolio. And then another place I really like is where we're at in Greensboro right now. So that's a good area. Like that northern Tri-Cities area, and just the Southeast in general. You're seeing a lot of the macro trends that you want to see, like people are leaving California and in other more densely populated areas and getting into more kind of rural kind of metros. I want to say a rural metro, but just spread out, more suburban.
Spreading out, exactly.
Yeah, these more suburban areas, like cities that are just more spanned out. So and that's kind of how the Southeast is. And a lot of these cities, I know that even like Atlanta seeing a lot of good growth. So I like the Southeast as a whole. That's really mostly where I focus, is kind of all these Southeast states: Georgia, Carolinas, Florida, Alabama.
Yep. No, it's good. Yeah, it's good feedback, especially on the Panhandle. It's overlooked.
Yeah, it is. And the reason, because it's so far from any large metro, like it's 4 hours from Atlanta, 3 or 4 from Birmingham, further from Mobile. Like there's no big metro or like international airport that immediately serves this area. So you have to drive to get here. Yeah. But the Alabama people just love it because they drive down here and Alabama flags hanging out the back of pickup trucks, and they just seems to be getting more of them. So
I bet. Yeah. Especially next week, I suppose we'll have to.
It's gonna be it's gonna be a rager with the national championship down here. Yeah, the Panhandle of Florida really is like southern coastal Alabama, so it's a lot more country and rural than you think.
No, it's cool. Yeah, my aunt, she was stationed there in the Air Force, so that's how I'm familiar with it. But very good. Well, cool, man. It was a great catching up with you, Blake. I appreciate you taking some time to join us today. And
absolutely, thanks for having me on. It was fun.
You take care, bud. All right, thanks so much.